double check audio is working, and then we can formulate what to talk about.
Yeah, sure. Let's send you it right now. I got it going here. I have somewhat of a kind of plan laid out for what we could talk about. If you find anything else, obviously, I'm extremely open to suggestions, but take a look and yeah, we can kind of like see from there.
Okay, let me just open all these links.
And this, yeah, we can kind of like see from there. That's a podcast right now.
Okay, let me just open all these links. Dude, so much institutional move. So much institutional news, man. Even if we wanted to talk about other stuff, we'd still have to address this.
Yeah, right. Yeah, a lot of it's pretty important. Paul Tudor Jones expects Bitcoin to reach 500 billion in market cap. It's at 320, 350 billion. So almost double.
Damn.
Yeah, man. China airdrops digital yuan worth $3 million. 10,000 stores will accept it. That's pretty crazy.
10,000? Damn.
That's doesn't seem like a... Oh, that's weird. Wait, I think the title is wrong. Huh. Yeah, they got the title wrong. That's so shitty of them. 10,000, but it said within the actual article. The digital currency will be accepted at 100,000 stores, including JD.com.
Oh.
And like all throughout the post, it's 100,000. Oh my god, that sucks for whoever posted that. It happens. I've done that.
Happens to the best of us. Yeah, all these stories seem good. Starting off with that banking regulation and then moving on to keeping the institutional financial vibe with Southeast Asia, DBS,
Mm-hmm.
Tudor Jones, institutional purchase, 100 million in Bitcoin, airdropping for 100,000 stores. Man, that's big. I saw some videos on TikTok of it being used today, actually.
Oh, no way. That's actually...
Yeah,
Actually talk about that. That's pretty cool.
it seems pretty sleek. Was there TikTok or Instagram? I don't know. Either way, still pretty cool. Grayscale survey connects COVID pandemic purchases. First Ethereum. Is this actually an ETF? I don't think it is.
Yeah, I didn't think it was. Let's actually look.
Yeah, I think that headline's wrong because it's not an ETF. It's a fund of Ethereum.
Yeah, 3IQ Ethereum Fund. Okay. Yeah,
It's not an ETF. Like it's not a mixed bag of equities.
It's just ETH. It's a fund of ETH.
Yeah, maybe we can correct Cointelegraph in this episode.
Roast.
Bitcoin looks to rank in top 3 Amazon's macroeconomic list. Cool. This seems like a great episode.
Sweet. And then I thought it'd be a good way to end it talking about a person who gets 6 years in prison for basically creating a $25 million Ponzi scheme.
Yeah. And how conducting yourself in an honorable manner is the best way to do it.
Yeah, that's I would say a really good way to end off. All
Oh,
right.
oh, wait. Are we recording? No, we're
No,
not.
not yet.
Tower Bet paid us half the amount, and they wanted to see a fucking draft of the video, which is annoying as fuck for TikTok. So the draft is in the DMs with Anastasia if you want to see it, but pretty easy, 300 USD for fucking one TikTok video.
Damn. So they just wanted to see it before we post it?
Yeah, I made $10 in the game. Well, they
Really?
they gave us $20 of BTC.
Mhm.
I immediately lost half of it in the first game I played in, and then I doubled $10,
Okay.
and then I lost it all the next game.
Oh my god. That's
Yeah, dude, one of the games that I went up to was participated in, I wrote it to 10x, and I thought I was big dick energy, bro. It went to 1,600 times.
Fuck.
That's the highest I've ever seen. Everyone in the chat was popping off.
What the fuck?
So if you put in $1, you would have gotten 1,600.
What the fuck?
Yeah.
That's insanity, dude.
And then the very next game, it stopped at like 1.0. So literally everyone participating lost their money.
Oh, because I feel like it does that just because you see that number and then the next time.
It's so psychological.
Exactly. It's not random, I don't think.
There's all the algorithms are available on their website. Because it's all blockchain, right? It's just smart contracts.
That's so cool to me.
Yeah, right?
Damn. Yeah, yeah. I haven't tried gambling in the crypto realm yet, but
No, I don't want to do it anymore. It's suspiciously fun.
yeah, fair enough. All right. Let's do episode 23, and we're running out of ideas, so just in short, explain how Bitcoin's bullish.
Institutional involvement. No, that's a pretty lame title.
Institutional interest?
I was thinking institutional involvement.
I think that's good.
Okay, let's do it.
Institutional involvement.
Oh, damn, my TikTok's popping off. 4K views.
Oh, wow, really? Damn.
Yeah, it's about being in the top 1% of BTC owners.
Yeah, I saw that one. We're just covering what we already covered in the podcast. So that's pretty easy.
Yeah, right? We already know what's going on in the niche.
Yeah, exactly. It's definitely useful. 23. Institutional involvement. All right. Let's pause. Hey traders, welcome to another Performante podcast. This is episode 23, and we're going to be continuing the conversation with the institutional involvement. So I'll pass it over on to Nathan to discuss what we're going to be talking about today.
Hey everyone, welcome to the 22nd episode of the podcast on December 12th. Happy to have you here. So just jumping right into it. We have a news that a top U.S. banking regulator has confirmed that positive cryptocurrency regulation is coming in a matter of weeks. Specifically, they said by the end of the Trump term. They are hopeful that it's going to work for everyone, and it will make it easier for crypto investors to know how to invest, potentially attracting more institutional investors. Love to hear it. Do you have any thoughts on this, Keith?
Yeah, I definitely think when tides are turning, it presents an opportunity, and there's going to be no better opportunity when there's going to be governments changing, political ideologies, and really different regulations that are going to be coming in. And if it's going to be positive for the next 4 years, along with the ending of the bear cycle leading up to the bullish cycle that we're going to be seeing here, it does look like it's all coming together pretty well. Perfectly. I don't want to say absolutely perfect because markets are always changing and there's no guarantees in life, obviously, when investing. But in short, it does look extremely bullish both on the technical and fundamental standpoint. So continuing on with the overall aspect of what we're going to be talking about for the first half of the podcast, Southeast Asia's largest bank, DBS, launches its full-service Bitcoin exchange. So they've recently officially launched it, and the CEO said, I have a really good quote here, "The exponential pace of the asset digitalization provides immense opportunities to reshape capital markets." And the fact that he's taking it so seriously just suggests a level of disruption that I think will happen within the financial space, like capital markets being able to raise money extremely efficiently through tokenization. And he says also, for Singapore to become even more competitive as a global financial hub, we have to prepare ourselves to welcome the mainstream adoption of digital assets and currency trading. So, pretty awesome quote.
Yeah, the DBS exchange is claiming that it will offer currencies, or the fiat currencies, SGD, USD, HKD, and JPY, as the four most used fiat currencies in that country, and they will be using Bitcoin, Ethereum, Bitcoin Cash, and XRP as their primary sponsored fiat. So that encompasses one aspect of what they're calling the digital ecosystem. The other two components of it will be digital custody, so I imagine some kind of proxy ownership, maybe for the investors that they work with, and the last part is security token offerings, which again is another big niche and just another one of the spaces that are available for invasion when these institutions and banking companies are looking to enter the space. So keeping in line with that billionaire vibe, we have hedge fund manager Paul Tudor Jones expects Bitcoin market cap to grow above $500 billion. He claims that the price is heading north. Hopefully he means the moon, not north as in Canada, just a little bit north of the border there. In May, he revealed that he believed Bitcoin was his inflation hedge, and he had put about 2% of his portfolio in cryptocurrency. Just because he sees a massive upside. It's unbelievable just to kind of hear this positive perception that we're seeing from big players within the finance markets.
Yeah, it's unbelievable. He even said in a quote here, what you can be certain about is in probably 20 years from now, our kids and grandkids, whatever, all of us will be using some type of digital dollar. So the shift is inevitable, and we're seeing these people who are extremely knowledged in global macro, understanding financial markets, understanding disruptive technologies, especially in the financial space, and they're seeing the opportunity. And we've been talking about it for a while, talking about institutional buyers coming in, and Paul Tudor Jones is probably one of the biggest influences in terms of him giving like the green check mark and saying this is an asset that should be within a portfolio. So we are seeing that shift for sure. So going on to the next topic, still keeping with the institutional players, Mass Mutual purchases $100 million in BTC. The company reportedly hopes to achieve what they call measured yet meaningful exposure to a growing economic aspect of our increasingly digital world. So we see these institutions averaging in, they purchased 5,470 BTC for the average price of 18,279 USD. So their average in price is extremely high, but they're still able to understand the value that they're able to purchase at that price, right? It's not like they're haggling. They're saying, I don't mind getting in at basically $18,000, $19,000 because they see the value and they see the asset as something that will be lucrative in the future.
Yeah, they're FOMOing, so they're either gonna have diamond hands and average on the way down if there is some kind of dip or retraction in the market, or they're gonna panic sell like noobs and say Bitcoin's the worst investment in the world. But either way, Mass Mutual, 100 million into Bitcoin, measured yet meaningful exposure. We'll see what the future has in store for this Massachusetts-based insurance firm. Yet again, just another name to toss into the list of big money flowing into the market. And so for our next story here, we have coverage coming out of China that they are airdropping the digital yuan for $3 million, and it's estimated that 100,000 stores will be available to use it. This includes a store called JD.com, which is one of China's largest online retailers. I saw a video of its usage on Instagram or TikTok. I'm not too sure, but it looked very sleek. Like the payment system, Quick Tap, kind of looked like Apple Pay. You got a receipt immediately for your viewing. Obviously, there are surveillance concerns with these kinds of digital dollars because it is a transaction on the blockchain. And if you're using a government crypto, you bet your ass they're going to know when, where, how much, who was involved with that transaction. Just kind of a side effect of the technology. But yeah, either way, great news coming out of China in terms of adoption. Maybe not great news in terms of personal privacy rights, but that's something we're slowly losing anyways, right?
Yeah, honestly, even a little bit more scary. Just looking a little bit further down the blog, uh, while you were talking about the kind of personal rights and privacy, I was reading this. The People's Bank of China calls this new technology that they've recently implemented on some of the tokens that they've given away and it's called dual offline wallets. And this allows them to use a digital wand to pay for goods and services without having to be connected to the internet, effectively replacing notes and coins with the digital wand. So they can track you even if you're not connected to the internet. That's pretty terrible. It's extremely interesting and cool and innovative and useful. I agree with that. But in terms of, you don't even need to be connected to the internet in order for regulators, governments to be able to understand exactly what you're doing, is just creating less space for you to have that freedom and have that privacy. So every positive has a negative. Every coin has a side that may not be so great in some aspects of life. So I think we'll have to figure that out, like Nathan said there. So
I'd be interested to see what kind, not necessarily utility, but increase of usage that are seen with privacy-centric coins like Horizon or Monero. Because ultimately, I feel like the individuals who use the cryptocurrency networks for illegal, illicit, and suspicious transactions, let's call it, I feel like they're definitely going to get pushed away from using Bitcoin and kind of those mainstream pseudo anonymous forms of transaction.
mhm.
And so, just for our next story here, we have a Grayscale survey that had significant data to suggest that the coronavirus pandemic played a new role in investors' choice to buy Bitcoin. And it's interesting to see that this data suggests that it's both institutional and retail investors are keen to accumulate Bitcoin. It's coming at it from both sides to kind of suggest that Bitcoin is becoming mainstream. And of the survey participants, nearly half believed that cryptocurrencies will be regarded as mainstream mediums of exchange by the end of the decade. So again, we've been harping on this, but this is such a paradigm shift in terms of how the entire niche sector and projects were seen from the public's perception. It is incredibly bullish. And so, just to quote this blog here, Jonathan Hobbs, COVID was the match that lit the flame for institutional adoption. But the firewood was building up long before it. Now that the fire is burning, it will take a lot of water to put it out. When the world is finally cured of COVID, the economy will still be sick with debt. Central banks will continue to print money to try and inflate away those debts like they have done since the 2008 financial crisis. This means the institutional narrative of Bitcoin being an inflation hedge is likely to continue long after this pandemic is over. Quite,
It's yeah,
oh,
yeah,
quite,
quite. Go on.
I was gonna say quite the quote coming out. It's interesting to see those kind of parallels to the key events that we're talking about, the fluctuations in interest rates, that positive feedback cycle of inflation, and kind of all pointing towards that one central conclusion.
Yeah, well said. I think it's definitely going to be evident later on, and there's going to be those few key individuals who saw it early. And not saying we're on track to be those key people, but I definitely feel like we're yelling from the rooftops as loud as we can, just to be aware, to understand. You don't have to put 50% of your net worth in crypto like Mike did here, Mike
Yeah.
Novogratz, but having some understanding of the potential of blockchain, BTC, and the hedge against the currency, the US dollar, and other native currencies that is really being printed into oblivion, slowly but surely. So the next thing we're going to talk about is more options and the lack of friction that there really is now with not just investing in Bitcoin, but other assets, and in particular Ethereum. The Ether Fund has recently, or is going to actually have an IPO, I believe tomorrow. Looking at this blog here, it is 3IQ, and they introduced the Ethereum fund, which basically stakes Ethereum. You don't have to purchase enough to actually make a node. You can just purchase shares, and they do all the back end stuff. You just hold the shares, and I believe they even have a dividend. I don't exactly know, but I'm sure they provide some level of payout because they're also getting paid out in Ethereum as well.
Yeah, it'd be interesting to see how this develops because another thing that is important to note is that it was being spread around social media as an Ethereum ETF, and even as I read through this Cointelegraph article, they do call it an ETF. And although it is an Ether fund, that does not stand for exchange traded fund. That's a very big difference when it comes to the kind of instrument that it is. This is more equivalent to kind of the grayscale products that we've been seeing. It is not a true ETF. It was listed on the TSX and closed at $11. It opened the IPO at 10.8, it looks like, with setting highs at 11.5. So I'm interested to see just how this develops. If it does start producing a quality dividend because of its decentralized finance structure, contributing to that network, reaping the rewards via staking and hosting nodes, it'll be kind of interesting to see if the public's eye begins to shift towards it, if it does have that attractive dividend payout ratio. Who knows? It could attract a lot of people that might not otherwise pay attention to these kinds of investments and instruments. And so the next story here, Bitcoin breaks into top 3 Amazon's macroeconomics list. A new book on BTC catapulted into the top 3 bestseller list. The book is called Bitcoin, Hard Money You Can't Fuck With. Why Bitcoin will be the next global reserve currency. It was up there with Millionaire Mindset, Habits and Simple Tricks, as well as The Great Demographic Reversal. It's interesting to see just Bitcoin getting that kind of coverage. I'm not really sure how exactly the Amazon bestseller list works in terms of how it dictates. Is it volume of sales? Is it volume of click through? Who knows? Could be a paid ad. Either way, great Bitcoin exposure on that front page of the Amazon macroeconomics section.
Literally never thought about it as an ad, but hey, honestly, it could be.
Who knows, right? Can never tell nowadays. And
Yeah.
so I'll pass it off to Keith to finish up with the last story we will be covering.
Awesome. Just wanted to touch on one thing before we move on. It actually is a pretty valid point here. It talks about the level of interest on Google hasn't been as significant for BTC than, for example, we saw in mid 2017 and especially later 2017 there. Yet BTC is still rocketing and doing very well. And I think that's because the institutional investors aren't looking on Google to do their research, right? The overall investments that are coming in is more institutional rather than the retail novice traders that we saw in 2017. So I think the FOMO for the general mom and pop grandma's asking you how to buy Bitcoin, that'll happen way later on, and we're already seeing the traction. So yeah, I think honestly just keeping a close eye on the level of interest of people searching on search engines like Google for Bitcoin and related cryptocurrency headings and categories is I think definitely very useful. So moving on to the next topic is going to be to kind of cap it all off. We have been talking about some unfortunate events that have occurred to novice investors losing a significant amount of money. I believe it was 50K due to the phishing scams with the ledger. So some good news, I guess, on that front. Man gets 6 years in prison for a $25 million diamond and crypto Ponzi scheme. So not 100% crypto. He also had some sort of Ponzi scheme in diamonds, but we are seeing these really shitty individuals get what they deserve. I don't think it's fast enough with how many people and how many scammers are popping up. But in terms of getting justice, we do see that we are seeing that bright side of it as well.
Yeah, I feel like just in general, 2020 has been not necessarily the year of the scammer, but there's been a lot of people claiming like those stimulus checks for dead relatives, those tax benefits, a lot of crypto scams going on. Those stupid idiots are still commenting on our Instagram and TikToks. FYI, they're not professional trader, Bitcoin miner experts that can turn your investment from 3,000 to 30,000. It doesn't work like that. And we just want to really resound this warning home. Just stay safe. Don't send people your coins. take those appropriate steps to protect yourself. Keep your funds off exchanges. Keep your passwords safe. Change them frequently. Two-factor authentication is great. And really just try and conduct yourself in the Wild West in as much of an orderly manner as possible, just because that will help manage some of that macro risk that comes with just being involved in the space.
Definitely. Well said. So that wraps up our overall Performante podcast. Thank you very much for listening. We really appreciate it, or watching if you're on YouTube. If you do have any suggestions on what we should talk about next, definitely put them in the comments or Discord, or however way you are able to reach us. Hopefully you understand we have like a TikTok, Instagram, YouTube. We even have a blog if you do not know. Lots of really quality information on there. So thank you very much for listening, and I'll pass it over on to Nathan to finalize the podcast.
Hey everyone, thanks for tuning into this episode. I really appreciate everyone's support, and thanks if you made it this far. Have a great night. We're out of here.